safety issues that we need to observe before the commence of the hearing today.
Thank you very much, Ms. Masset. I would like to inform everyone that in terms of our health and safety, according to the news, it may seem like the COVID infections are actually rising. So I would really implore everyone to take all the necessary precautions to be safe, wear a mask, sanitize, and for those who have not yet vaccinated, they should make their way and get vaccinated. And for those who have already vaccinated, they should go and get their booster. They can prevent themselves from further infection and also being statistics of this pandemic. And our ethics moment for the month is fight against corruption. Corruption is a form of dishonesty or a criminal offense undertaken by a person or an organization entrusted with a position of authority to acquire illicit benefits or abuse power for personal gain. Corruption is endemic in South Africa and undermines the rule of law and democracy. It also negatively impacts service delivery, human and socio-economic development, job creation, and public trust in government, including investors' confidence in the country. Fighting corruption requires us to, amongst others, execute our duties and provide professional advice and services with honesty, honor and uphold the rule of law at all times, ensure that NERSA always complies with relevant legislation,
item to consider. It is is to get the views of stakeholders, facts and evidence on the document that was published by NERSA, which is the guidelines, as well as the benchmarks that are contained in those guidelines, which is the document that NERSA will use in evaluating various applications submitted by municipalities for their tariffs, of which tariffs must be applicable on 1st July 2022. So that is what we are going to consider today. Please, can you switch off your mics for purposes of avoiding any interruption during these proceedings. My name is Nomfunda Maseti, and I'll be chairing today's hearing. And these are hearings that are conducted in terms of NERSA's rules for public hearings. The committee that The part-time regulator member and the member of the electricity subcommittee. Mr. Smanda, if you can kindly also activate your camera for the benefit of stakeholders. Okay.
Sorry, Chair. Thank you.
Thank you. Thank you so much, Mr. Smanda, and good afternoon as well. Members and stakeholders, today it was duly advertised in various newspapers, including national newspapers such as Bielt, Saturday Star, Sunday Times, Business Day, as well as in the Government Gazette. It was also posted in the NERSA website for those that can access the website. And now it is held in accordance with the National Energy Regulator Act of 2004, of which states that all of the affected parties must be given an opportunity to state their views and present relevant facts and evidence to the energy regulator so that the energy regulator can make an informed decision. As stated earlier on in my opening remarks, I stated that these proceedings today are governed by the NERSA rules on public hearings. And I'm going to summarize those rules now. And those rules state that all parties will be given, will be required to make their presentations under oath. And the presenter that has requested an opportunity to present today has been allocated 20 minutes to do its presentation. It is important that you note that only members of the panel may ask questions to the presenter. However, if the members of the public that have joined the call have any questions of clarity or questions that they would like the regulator to ask to the presenter, the members of the public must send an email, which is monitored every second by Mr. Eliezer Dlamini, and you can send it to eliezer.dlamini@nersa.org.za. The panel then once receives those questions from Mr. Dlamini, as we keep on monitoring the notifications from him, we will then decide how we will ask the questions that you are requesting us to ask from the members of the public. Should there be any information that you consider to be confidential, and that is the presenter today, if there is any information that you consider to be confidential, please inform the panel so that the panel can decide whether we need to clear the room and make sure that we can hear such confidential information, and that information can only be heard by the members of the public and NERSA staff, and in the exclusion of all other members of the public. It is also important that you note that the recording of this hearing will be done through our recording system, and will also be a live audio streaming on NERSA's Twitter page and other pages, including YouTube as well as Facebook, just to ensure maximum outreach to those that can be in a position to access those social media pages of the energy regulator. In terms of the house rules, we request that you switch your cell phone to silent mode at this time, and please ensure that your mic remains on mute and that your video is switched off at all times so that it does not disrupt and interrupt the presenter and also the members of the panel when they are interacting with the presenter. Unless then the presenter is the one who is presenting at the time and therefore needs to have the mic as well as the video switched on. In terms of the request for presentation today, we received only one request, and that is from Mr. Hendrik Barnard, representing Elexpert on behalf of George Municipality. So he will be the only presenter that will do presentation for us today. But we do have a number of requests for stakeholders that wanted to observe today's proceedings And in addition to that, I must just remind the members of the public that we have already given the public 30 days to comment on this discussion document or the proposed guidelines. And we have received a number of comments, which the team is still working on. And all of those comments and input that we're going to receive today will be taken into consideration when we take the final decision on this matter. I would like now to invite Mr. Hendrik Barnard to then activate your camera. Thank you very much, sir. Do you have any objections in taking oath?
No, I don't.
Okay, thank you very much. May you please raise your right hand? Hope that I'll be able to see it. You must bring it closer to your face so I can be able to see it. To your face, that hand. All right. Thank you very much. Okay. Do you solemnly declare that the facts and evidence that you're going to provide before this panel today will be the truth and the whole truth?
I do.
Thank you very much. May you please state your name and your designation at LExpert, and please also indicate your relationship with the George municipality, since you are presenting on behalf of that municipality. For the record, please.
Thank you. My name is Hendrik Barnard. I'm the director of LExpert. We completed a cost of supply study for George about 2.5 years ago. It was approved by NERSA, and I'm currently assisting them with the implementation of the proposed tariffs. But I have also, in the last year, completed a cost of supply study for Merafong and Salt Plaatjies, and I see some of the members are there, and busy with one in Oeverstrand municipality.
Okay, but for purposes of today presentation and input, you are acting on behalf of George municipality.
That's correct.
All right, and you do have such authorization because it is important for us to accurately attribute the views and the facts to the relevant stakeholders, so that it is not just LExpert on its own, but we can then ascribe this the facts to a George municipality. If that has already been provided and our legal team has that kind of confirmation. We just want to just get things right so that we don't come across challenges when we need to ascribe any views.
Yes, in fact, George municipality submitted my written proposal. I didn't do it. They did it themselves.
All right. Thank you very much. All right. You may then start with your presentation, sir. Okay, it is quite a long document, but I'm only going to highlight the important points. Chair Masetu and board members and all the other participants, thank you for this opportunity, and I hope I don't bore you. So firstly, we welcome the interactive participation via Teams. In fact, last year, it was a very informal participative process, and I thought there was some real value coming out of it. Today is much more formal, but that is fine. So I want to start off by complimenting NERSA for not approving the massive increase which Eskom has requested. That would certainly have caused serious problems for municipalities. Although this is still above inflation, we believe it is manageable. So the first comment relating to the ABC approach, various individual comments has been given in this respect, but there was again comment asked. Firstly, I want to say that the industry accepts the cost of supply approach, including the return on asset determination for the revenue requirement. There's support for splitting GT and D and the system operator, but the proposed ABC and marginal costing process felt unrealistic
as was clear from all the industry feedback. And I really think this idea should be taken off the table. The cost of supply approach experience is being built up, and I really believe that is the way the industry should move. The impact of this method was, as it was proposed previously, would certainly lead to the bankruptcy of Eskom, which is not in anybody's interest. Then the issue of benchmarking municipal tariffs to Eskom was the next method that was proposed. It is felt that this method should not be used as there's no cost basis. And we know that the Eskom and municipal costs differ drastically, and that there are also massive and unfair cross-subsidies in the Eskom tariffs, which distort the situation for municipalities even further. This will simply apply a downward pressure on municipal tariffs, leading to increased financial dilemmas. It's easy to implement, but will create massive distortions. It's thus proposed that the cost of supply approach be continued, and that NERSA should focus on addressing the unfairnesses in the current Eskom tariffs. Then the issue of the municipal tariff based on the cost of supply. This approach is believed to be attainable, but NERSA also need to issue more cost-reflective benchmarks, which would assist in guiding this whole process. The current benchmark do not link to the cost of supply. There are, however, a few key issues that need to be addressed by NERSA in the cost of supply process. The first one relates to the handling of depreciation and the asset value basis. And it largely relates to whether we use historic cost basis or we use replacement values. And this has a massive impact on the revenue requirement, and I believe some guidance need to be given in this respect. The second issue relating to obviously the return on asset parameter, NERSA also need to issue a guideline to say what would be an appropriate return on asset. Then the issue of surpluses and surcharges. The EPP makes particular reference to say that no surcharges are allowed until there is proper ring fencing. And unfortunately, it seems that there are already some municipalities with these external surcharges, but they are not properly ring fenced. That's in respect of cost of supply. Then there was the issue asked relating to the maintenance target of 6%. We believe that the 6% is a good level. But one of the problems that I've seen is that the municipalities submit budgets with a 6% provision for maintenance, but they never spend the money. Because as the year goes on, they cut the electricity budget and use the money for other stuff. In the end, the poor electricity department cannot do the maintenance which they have. And that, I think, is something that NERSA need to monitor and manage. Then the current approach of the municipal tariffs based on a percentage guideline increase and municipal tariff benchmark. Generally, this approach is supported for those municipalities without a detailed cost of supply study. So what we're saying, if you have a cost of supply study and the revenue requirement has been calculated, that should be the prime driver of the average price increase. Then just in terms of the particular items, in terms of finance cost, it was proposed that go up by 2%. But I would rather suggest that municipalities must show what are the loans that they have taken out to warrant this additional interest and depreciation. We are worried about this benchmark of for bad debt. We must remember that the bad debt only relates to conventional customers. As prepaid customers, when they bypass the meters, it is not shown as bad debt. It is just shown as losses. So we believe most of the municipalities have got deposits of close to 2 months, and after the period required, those supplies should be terminated. But that is simply not happening, and that is why these bad debts are building up unacceptably. Then in terms of the current guideline increase formula, we support the general approach followed, but there's one issue that needs to be addressed, and that is the municipal department overheads. I've been applying a process of doing proper ring fencing and allocating a fair portion of the municipal support departments such as supply chain, HR, finance, etc., etc. And in some cases, I find that it's acceptable, say, around 20% of the direct cost of electricity, but in some cases, it's 80%. And I think some guidance also need to be provided by NERSA in that respect. Then in respect of the current D forms, the Excel files, those are very old, very unfriendly, and really, really urgently need to be updated. And I've listed all the items here, which I'll not go through now. Then, in respect of increases that is above the guideline and the benchmarks, it is supported that municipalities must make a request if the increase is higher. We support that approach. Again, if there is a cost of supply study backing it, I think that should be the prime driver. But NERSA must also give a clear guidance as a general item. What information is required for a higher increase? I've had cases where an application was made for a higher increase, and then all of a sudden a host of additional information requirements are requested, which then normally becomes a time problem. So we propose that a clear guideline be drawn up what is exactly going to be required if an additional increase is requested. Then on the issue of small-scale embedded generation, or SSEG, I think the first important point, we should not call this the SSEG tariff, because everybody thinks this is the tariff that the customer should be supplied at. We should rather call it the SSEG feed-in tariff. In other words, that only relates to what is the credit that the customer will get when he feeds electricity into the network. Of course, that could include that will include the energy credit, but it could also include a fixed charge to cover the additional operating costs. Currently, the guideline says the increase should be linked to the municipal increase. That's incorrect. This increase should be linked to the Eskom increase, as this rate is linked to the Eskom rate. Furthermore, the feed-in rate should be on a time of use basis, because there's no particular profile for feed-in energy. That will depend totally on the type of system installed, whether they've got storage, and what their own load profile is. Okay, then the issue of what is the SSEG tariff? In other words, what is the tariff for those customers, not for the feed-in? I think it's very important here. We know that the consumption level, for example, with PV or photovoltaic systems, we lose a lot of energy, but the peak demand on the network remains the same. The customer services remain the same. And therefore, if we have an unbundled tariff, it will cause the municipality massive revenue loss. So such a tariff should have a basic charge to cover the customer service cost, a capacity or network charge to cover the network cost, and time of use energy rates similar to the Eskom tariff. There is something to say for customers who do not want to feed in that their tariff could be a single energy rate, but that is another issue. We support the 90% of Eskom time of use rates. The guideline says 80% of the Eskom energy rates, but I've proposed to all the municipalities where I've worked to use 90% of the time of use energy rates. In other words, no credit will be granted for the non-time of use energy rates, which mainly is the renewable energy levy and the electrification and rural subsidies. So we just felt that when we describe it, we should rather set it in terms of the time of use rates only. Then just in terms of the tariff, I mean, there's been guidelines in the past that said, you know, the markup on energy should only be on the Eskom energy charge should only be 10%. But let's just come back to reality. Municipalities are allowed to make a surplus of between 10 and 20%. The losses is typically 6 to 10%. And then my studies have shown that in most cases, the subsidies to poor domestic customers over and above the equitable share for free basic electricity is usually close to 10%. If we just add these three together, we easily can get to a 35 to 40% surcharge on energy. And that is some of the reasons why the municipal tariffs are higher than those of Eskom. Okay, then finally on the benchmarks, the current benchmark does not relate to the EPP tariffs. It only refers to the average prices. And the problem with that is that my findings is that in the cost of supply studies, it depends so much on the actual local conditions. You know, whether you're buying a rural or urban tariff, we know that for some municipalities, 20% more on rural, yet they have the same benchmarks. We know of the court case going again today where I know that their purchase price from Eskom at the rural tariff is more expensive than the NERSA benchmark resale tariffs. So that is a problem with the current benchmarks. We have the geographical differences of 1 to 3%. We have within the municipality very different customers. A lot of them, especially the municipalities I've been working with in the last few years, Mossel Bay, George and Knysna, have a lot of holiday homes. And you have a typical house with a 3x60 amp supply using for 2 or 3 months, maybe 3,000 kilowatt hours a month, and for the rest, nothing. So their average price could be as much as 5, 6, 7 rand per kilowatt hour. Yet the benchmark is 2. And that's the problem with the current benchmarks. Also different densities within the town, different customer mixes, underground requirements typically at the coast. We know with the rust there, those networks are typically more expensive than in the inland areas. So what we propose is that NERSA start looking at benchmarks which relate to the cost of supply. Yes, there should be a benchmark for a lifeline, and that should be linked to some kind of a capacity limit. The government's policy is clear that says we must subsidize basic services. And we have massive debates in municipality where they're saying, no, we've got to give everybody a 60 amp supply. That's not in line with government policy. Then there should be benchmarks for the basic charges for single and 3-phase, and for large customers, capacity charges in rands per amp. And in all my studies, I see that it typically differs between 5 and 10 rand per amp per month. So NERSA can start issuing such guidelines. They have got the results of all the cost of supply studies. And then access charges for large customers, maximum demand charges, and then energy charges. So when we look at time of use, we believe we should look at the markup on the various rates. And if one applies a percentage markup on the energy rates, where you have an Eskom peak rate of 3 Rand, a 20% markup will give you 60 cents. Whereas in the off-peak time, a 20% markup will give you less than 20 cents. That means if a customer shifts load from the peak to the off-peak time, the municipality will lose much more revenue than what they save in purchase costs. And we know that is the objective, is to get more load shifting. But in the process, we don't want municipalities to go under. So the NERSA benchmark should reflect the tariff structures as in the EPP and not just average prices. And this is because the average prices depend largely on the average consumption and not so much on the cost. So with that, I'd like to conclude. In general, we support ongoing discussions, interaction with NERSA to jointly improve the regulation of electricity in the country. I've got a good relation with all the NERSA staff. I found there's been a change over the last few years, and it's actually a pleasure working with him. I thank you.
Thank you very much, Mr. Barnard, for your presentation, and also highlighting some very important issues, and even making some suggestions for a forward-looking approach on some of these things that still need to be resolved and be looked at carefully by NERSA, and NERSA appreciating the impact in the manner in which municipal tariffs are determined. And you have highlighted what you believe are the key issues that NERSA should consider, and also develop some discussion papers around those issues and test them with the electricity market, especially at the distribution level, so that we make sure that even with the pricing approach on tariffs, such approach will also be backed up and supported by the electricity pricing policy that is in place. As you indicated, that some of the elements may not necessarily be in line with the EPP. So we appreciate your input, and we appreciate the time that you've taken to put together that document. I would like to now request the panel members to ask questions of clarity on the presentation that you have given us and the document that you have shared with us. Members, by show of hands, if you have any questions of clarity from Mr. Barnard based on his presentation. By show of hands, members. Okay, Mr. Mkhize, I'll start with you and perhaps give members some few seconds, noting Ms. Sithole at this moment. I'll come back to other members later. Mr. Mkhize.
Thank you, Chairperson, and thanks a lot, Mr. Barnard, for your presentation. I've noticed that you are for the scrapping of the activity-based costing approach. I'd just like maybe from your side to mention one or two misgivings regarding the APC in as far as this is concerned. And you are for the cost of supply studies, but we note the challenges that you have had regarding municipalities undertaking their cost of supply studies to then assist in this process, because it's one thing to say you are going to use a particular methodology in order to find that there is actually no forward movement because that not being undertaken. So I would like to know from your side as to what do you think ought to be done to deal with the aspect of getting these cost of supply studies undertaken. And then you mentioned the issues of the 6% on repairs and maintenance. when you highlighted money being returned or diverted from that, and that should not be done. Or if you've got any suggestions in remedying that. And two is you don't. I just want to, with regard to that, I would like to know if you don't see any link that could be made between the percentage of repairs and maintenance and the capital value of those assets, the state of those assets in terms of just I'd like you to just indicate if what kind of functionality do you see between the two, the repairs and maintenance as a function of the assets that are being maintained or repaired. Thank you.
Thank you very much, Mr. Mkhize. Mr. Tole, you may come in.
Thank you, Chair. My question may be linked to what Mr. Mkhize has just said. I think, Mr. Barnard, thank you for your presentation. And in your presentation, you indicated that NESA allows 6% for maintenance. And we end up with municipality not using that amount of money for maintenance, but for other services. And I just wanted to find out from you in terms of what is it that you think needs to be done over and above what NESA does? Because NESA does a lot of activities to ensure that this money is used for maintenance, such as your audits, the maintenance plan, reports, and monitoring of those maintenance plans. There may be many other activities that I can't recall of now that NESA does, but those are the main ones. From your side, what is it over and above what NESA is doing do you believe needs to be done to ensure that the municipalities use the allocated percentage for maintenance for that specific purpose? Thank you, Chairperson.
Thank you, Ms. Sithole, for that question. Mr. Smanda?
Yes, thank you, Chairperson.
Thank you. So Mkhize, firstly, the issue of ACB, that's a debate.
Mr. Barnard?
Yes.
I thought that Mr. Sibanda had his hand up, but if not, I do have questions to ask. So if you could just take down the questions and just allow this first round from the members, there may be follow-up questions. If you can just take down the questions first, and then you will come in and provide responses to each of the questions asked by the members. Mr. Smanda, did you have any question to ask?
Yes, Chairperson.
Please go ahead. Thanks.
Yes, thank you, Chair, and thank you to Mr. Bernard. Chairperson, my first question is probably linked to what Mr. Mkhize has asked around the ABC approach versus the cost of supply studies. Now, for me, the issue is we've had these difficulties of obtaining cost of supply studies. Now, what do you think could be a short-term solution? Because yes, in the long term, perhaps would want to obtain those studies, but it has been a challenge to get them. So what in the short term could be an alternative, seeing that you have concerns regarding benchmarking municipal tariffs to ESCOM tariffs? So is there a short-term measure perhaps that the regulator could adopt and apply whilst looking at possible long-term alternatives? My second question is with respect to the So there are these variables that are taken into account when coming up with the guideline increase, and one of those relates to finance costs and bad debt provision. But then you seem to be saying that the threshold for bad debt is too high. So my question then is, what threshold would you propose? And then lastly, if you can just perhaps expand on what you mean by the fact that the SSEG tariff, well, you're proposing a different name for it, but you're saying that it should not be based on the guideline increase, but that it should be linked to the ESCOM increase to municipalities. Maybe you can just clarify what exactly you mean by that. Thank you, Chair.
Thank you very much, Mr. Sibanda. I do have questions as well, Mr. Bernard. I want to start off with the question around bad debts, because first of all, it's not something that can be encouraged. There should be a tool, a regulatory tool or principle that is articulated in order to curb bad debts, because then they will actually be funded through the tariff that the consumer must pay at the end of the day, and the consumer has no control over ensuring that licensees constrain and curb the bad debts. So for fairness here, so that we don't just compensate and assist licensees when bad debts are building up, instead of coming up with an objective criteria that will ensure that it will curb and curtail bad debts, and by so doing, we know that it will filter down into the cost and also the tariff that will have to be recouped or recovered from the customer. So I think that is what is important to take into consideration here. So what would be your suggestion in terms of NERSA intervening in the space with the aim of ensuring efficiencies in the costs that are claimed by these licensees through the tariffs for licensees to cover bad debts? If we can deal with that. And I think also that same question is linked to the issue of the finance cost, allowing, say, 2%. What would be your suggestion there in terms of the acceptable benchmark? I do appreciate the fact that the energy regulator cannot just accept 2% of finance cost without ensuring that there's proof of the loans. But not only that, the justification of the loans that have been obtained, and so that we can get the evidence around those loans that were acquired during the period, and how the cost associated with those loans can be accommodated through the tariffs. I think perhaps from our side, yes, there may be some work to be done, but I would like to understand what is the right benchmark? What is it that the energy regulator can do so that they don't just allow blanketly across the board the 2% on finance cost? With regards to surcharge, I was a bit confused first with regards to the surcharge here, what it relates to, because there is that fiscal, municipal act, I can't remember the title basically, but that's a charge pertaining to water services or to electricity services in that small piece of legislation that is administered by the National Treasury. Is not one that NERSA will determine, but NERSA do come in if there are norms and standards that are developed which have not yet been developed. So I wanted to understand this surcharge that you are referring to. Is it a surcharge that arises, or the one that is contemplated in that piece of legislation? Because I don't understand that NERSA, in terms of Section 14 on license conditions and Section 15 of the Electricity Regulation Act, and the section that deals with municipalities, allow in the Electricity Regulations Act that there be a surcharge per se. It talks only about the rate, the tariff, and the price, and interchangeably, and also requires that there be costs that are clear if they have to be recouped from the tariff. So I'm not understanding the surcharge aspect in that mandate that is clearly defined in Section 15. Where does that arise? Or is it a surcharge that relates to this piece of legislation that I referred to, which you are talking about, of which NERSA is not permitted to then determine that surcharge? I just want to understand the point there. And with regards to some of your proposals, I do understand the importance of cost to supply. It is prescribed in the Act that we must do. In addition to that, we take cue from the electricity pricing policy. However, in the way that you have justified in your presentation, some of the importance of the cost that must be covered, you seem to be focusing more on the losses incurred by the distributors, those licensees, municipalities, without showing how then customers are gonna be benefiting out of this. Have you looked at the situation, apart from just looking at the under recovery that may lead to unintended losses, right? But have you also looked at how the very same things that you're questioning could also result in overcompensation and over-recovery? I just want to see, so that from our side, we need to balance the scale here and also have the best interest of customers as well, and when the tariffs are determined, because all of that will ensure efficient pricing, and that will remove any cost that are not related to the service that is being rendered. So if you could kindly respond to all of the questions that are posed by the members. Thank you. Over to you, Mr. Barnard.
Thank you. Sure, that was a mouthful. Okay, let's start off with Mr. Mkhize, the issue of the ABC. It's as I started saying, it's a very complex subject, which I don't think we have time today. In terms of the cost of supply approach, I think the problem started with some people that worked at NERSA before. I've been in fights with NERSA for a period of more than 15 years. Not a single cost of supply study was approved. There was no interaction. There was only criticism. And now I must say, since Mr. Mongane has been appointed, there's interaction, there's joint learning by me, from him, from the whole team. And this is, I know already that workshops are being held. A simplified approach has been given to municipalities. I believe just there should be more interaction with the industry experts. Nobody has approached me, asked me anything. So I believe that the road is currently being taken. There is a lot of learning. The other thing that needs to be done is that NRS 058, that is the standard for cost of supply study, a draft was issued, then there were complaints, and it was kind of withdrawn. I believe it needs to be refined There's a lot of changes that need to be done, and also the issue of ring fencing need to be addressed. So that is what I would suggest, is to restart the process of revising NRS 058, and then, continuing with the process that we have now. It is going to take time. In the meantime, I don't think it is a crisis. We have the benchmark approach, the current NERSA approach, which is working. So I believe that is the way forward in terms of the cost of supply. Just in terms of the 6% issue, then this is an extremely difficult thing. How to manage that, because we know, especially with municipalities with high levels of debt, they can't even pay the Eskom bill. Never mind fixing networks. I mean, I've spoken to the electricity staff in some municipalities. They don't even have fuses to fix. They are putting in copper wires. That is some of the basics that need to be done. And they always ask me, and they think that the tariffs are going to solve the problem. But unless we can get the payment levels up, and I believe this is the crux of a lot of the problems in municipalities, and I believe it is a national crisis that should be addressed at the highest level by the president. The Eskom debt is rising, the municipal debt is rising, and all of these issues relating to the 6% and the proper management relates to the non-payment. All the municipalities that have got low losses, when I visit them, their networks is in good condition, they're doing their refurbishment, the customer service is good, but the moment they've got this massive non-payment, all of the normal things go out the back door. Then Ms. Amanda, again, we were really related a lot to the same issue on NRS, on the cost of supply, and the process that should be taken forward to increase understanding and the amount of studies to come in. The issue of bad debt, and it's also related to the question of some of the others. We are sitting with municipalities with massive amounts of debtors days. And I mean, that is something that, and the problem is NERSA's authority over the licensees. I mean, if you're sitting there with 30% of the municipal revenue sitting on 120 days. Now that in a normal business, the CEO and the executive of the company would be fired. But we can't fire any of the municipal officials. They can get placed under administration, and then 3 months later, there's an election, and the same people come back, and we just go on where we were before. So we have got a government problem in terms of the bad debt. I mean, earlier this week, I was in a public hearing with Saul Plaatjes, where one of the members asked, what is the outstanding debt of government departments to Saul Plaatjes municipality? And it's a massive figure. What is the bad debt? What is the outstanding debt of staff and council members to the municipality? Massive, millions of rands, but nothing gets done. I mean, what is NERSA going to do? We've got a government problem, and NERSA unfortunately cannot regulate all of those things. We've got all the government structures who are supposed to address these, but they don't. So I'm sorry, but NERSA, they can monitor, they can highlight, they can suggest, they can talk to National Treasury, but in terms of taking action, I mean, not a single municipality's license has been taken away. And, you know, if you take the license away, who do we give it to? So it's not a simple matter. The issue of the maintenance of the capital, it's not a simple matter. it's not just something that NERSA can address, I believe. Then, Chair, we'll say to the issue of the bad debts again. I've discussed that. You know, having massive amount of outstanding debt, why aren't the customers being cut? I remember when I was a district manager 30 years ago, all customers that were on the cut-off list was cut every month. If we go to a typical municipality where that have a problem in this respect, they might have a cut-off list with 5,000 customers, and they will maybe cut 500. So the rest of them just go on. So that is where the problem. But again, how does NERSA force them? They can have their benchmarks. They can give them instructions. But if the municipality doesn't respond, what can NERSA do? That's the problem. It's a governance problem that we have in South Africa. Just then, in terms of the finance costs, yes, I think we're talking the same language. There shouldn't just be increases allowed. If there are additional loans, provide that. The current debt that you have, give detail of those loans. But it is a complex matter, especially if we are going to move to return on assets. Now remember, in a return on asset regulation system, you don't look at interest, but you look at return on assets, because assets that are financed by profits, there's no interest. You are supposed to get your return on the money through the return on assets. That is the Eskom model. So this is not a simple issue, but for the moment, I believe that there shouldn't be a massive public hearing if a municipality wants to apply for an additional increase because it has taken out a big loan to fund a capital expenditure. Now we come to the issue of the surcharge. You are right, Chair. NERSA has no right over the regulation of the surcharge. What the EPP says, that no municipality shall have a surcharge until the electricity function is properly ring-fenced. That means the surplus need to fall away, and then there's a surcharge. That is what it means. So some of the municipalities, the few that have got surcharges, they are making a profit on electricity, and then they have a surcharge as well. And that is what the EPP is saying is not allowed. So just now, the issue of me focusing on the cost of supply and what is the benefit to the customers. I did a study now for George where we are rolling out capacity charges. And I did an estimate because the saving to the municipality will firstly be the saving in Eskom maximum demand charges and eventually not having to increase your notified demand. And secondly, the shifting of loads from the peak to the off-peak and standard periods. But thirdly, then, the reduction on the peak demand on the networks. We know that a lot of municipalities have got massive problems during the winter evening peaks. But 10 o'clock at night, those same circuits are idling. So if we can get customers to shift some load, which is recognized worldwide. 30 years ago, I was in France. And in fact, through time of use tariffs, they have inverted the normal domestic profile by customers shifting shiftable appliances such as dishwashers, tumble dryers, hair dryers, and those can be moved, and geysers can be moved out of the peak times. So that is where, firstly, the benefit will be for the municipality. On a time of use tariff, the customer immediately gets the saving because when he shifts load, he gets the saving. With a capacity charge, if a customer has the choice of taking a 60 amp supply with no management he's going to pay X. If he's willing to manage his load and he can come down to a 50, 40 or 30 amp supply, he will see a reduction. So it is a benefit to both. Now, just in terms of the over-recovery, that's why NERSA has got the revenue requirement formula. So if the savings through these measures mean that the costs come down, the Eskom costs down, the network costs come down, then eventually the municipality will be willing to apply increases below the recommended. And this is 100% in line with the EPP, where the key principle is the efficient allocation of resources, which has been proven worldwide. If you apply cost-reflective tariffs, you get efficiency. For example, what we're having now with inclining blocks where some customers' marginal rate is close to 3 Rand per kilowatt hour, it is even cheaper to use a diesel generator. So that is not promoting efficiency. Whereas we know in the winter peak, it should be at most Eskom 3 Rand plus 30%. So I believe that although my focus is on cost of supply, the eventual benefit will be for both the customer and the municipality, because eventually the municipality represents the customer. I hope I've answered all the questions, Mr. Msitole. Also, I think I've covered your issue relating to the maintenance plan. Again, you can have wonderful plans, but if you don't have the money, then you can't execute them. Thank you.
Thank you very much, Mr. Barnett. Mr. Mkhize, you have your hand still up. It's a lingering hand. I'm not sure if you wanted to ask a follow-up question. If not, I can ask a question and then I'll give members, if there's one or two other follow-up questions they may want to ask from Mr. Barnett. Mr. Barnett, I do want to test with you, given the fact that you have indicated that you have done work on the cost of supply studies for George and perhaps other municipalities, and some of those were approved. So I just want to check with you if you're able to indicate whether then you believe that it would be fair for NERSA to consider rather benchmarking the tariff applications for a specific municipality based on the cost of supply for that municipality, if that cost of supply was submitted to NERSA some time ago, as opposed to NERSA using these guideline increases and benchmarks. Do you think, is that the case that you are trying to make here today, that whilst you are in support that there may still be a role for the guideline increases and benchmarks? However, there are some municipalities that have tried to comply with the EPP by submitting their cost of supply for approval by NERSA. So for those municipalities who have their cost of supply approved, are you suggesting that NERSA should rather consider the cost of supply in the determination of their tariffs, so that that will then avoid any losses to be incurred? That's the first question. Linked to it, if then that's what NERSA, that's what you are proposing to NERSA, that for some municipalities NERSA must use the cost of supply, for others, for others, NERSA must then use guideline increase as well as benchmarks. Do you think it will be a fair way or a fair manner that the regulator should determine tariffs for municipalities? What about asymmetry challenges that the regulator must take into consideration if it allows that kind of situation? I'm just asking so that we can at least have a better understanding here. And if NERSA still continues and also wants to encourage compliance with EPP, should NERSA rather set the time period within which municipalities must migrate to cost of supply in compliance with the Electricity Regulation Act and the EPP, and in that perhaps also consider transitional arrangements for any other pragmatic challenges that may be facing municipalities. Could that be the forward-looking in trying to resolve some of the problems you've indicated in your presentation? I would like to also give Ms. Sithole at this point, and then Mr. Mkhize, I will still come back to you if you want to say something. You did not say anything at the time when I was asking you. Ms. Sithole, please go ahead.
Thank you, Chairperson, and thank you, Mr. Barnard, for the responses that you have given. But from my side, I just need to get confirmation in terms of your response, if I really do understand it, on the issue of maintenance. Because I take it as if you're highlighting it as a point that needs to be looked into. However, you have not given additional proposal in terms of what the regulator should be doing over and above what we are currently doing. Because you did say that it is a difficult issue. And from my side, in terms of the question I asked, that was that there are things that the regulator is doing. I think I cited audits, maintenance plan, etc. And I thought you were going to be coming in your response and indicate what is it over and above what the regulator is doing that you believe should be done. So can you confirm that you are just highlighting this as an issue? However, at this stage, you do not have a proposal in terms of what should be added in terms of the regulatory activities that we are currently doing to enhance that particular issue of ensuring that whatever is allocated for maintenance get used for that particular purpose. Thank you.
Thank you very much. And perhaps you may add the issue of capacity, because sometimes even if it's not used for unintended purpose, sometimes it is just not used at all because of the capacity in the municipalities. If that is the case, I guess also that's included in Ms. Sithole's question, if maybe that is also some indications or some things that you have observed, Mr. Barnard, in your interactions with the different municipalities. Mr. Mkhize Kabazel, do you have any follow-up question? Or is just the misbehaving hand?
Chairperson, thanks for the time for this, and thanks for the responses. I think Mr. Barnard might supplement what the comments, especially on the APC. I did not. Yes, it's just raising the issue of complexity, but I also would like to check if there is no kind of a hybrid where one can still you do those cost of supply studies, but then you still use maybe a method of APC in that context. And the issue that he raised, it's also because when I go to the to question number 6, actually, that where it's talking to the finance costs as well as the bad debts, that is the high percentage is sending a bad signal, is that there could be issues of signaling even with the percentage that is being used when one looks at the finance cost, one looks at the spend on repairs and maintenance. I think on those issues, if we can provide further comment in writing, I think it will assist the process going forward. Because I don't think that I'm looking at him actually exhausting all the issues right here and now. Thank you.
Thank you, Mr. Mkhize. And let me check if there's any follow-up, Mr. Simanda. I'm not putting any member on the spot here. I just want to make sure that I don't close you out. If there's any particular issue you would like to follow up on, Mr. Simanda, and then I'll also check with Ms. Mpongose if there's anything.
Chair, no, I don't have any additional issues to raise. Thank you.
Thank you very much. Let me check with Ms. Mpongose.
Thank you, Chairperson. I was covered by the question on maintenance that was posed by the CEO, Advocate Sithole.
Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very much. Let me check with Ms. Mpongose. Thank you very mu
I have a similar question.
Thank you. Thank you so much. Maybe then if you can respond to those questions. I think even my issue of regulatory challenges pertaining to asymmetry will also arise in the question that is asked by Mr. Mkhize. But just to get the specific answer on whether it will be what you're advocating, which is the cost of supply. Can these methods be applied, or can they coexist? If they coexist, will that not create another challenge, the asymmetry challenge? And would it be fair?
Thank you, Chair. Firstly, relating to your question on the cost of supply study, I've done more than 30 cost of supply studies, including international utilities for Swaziland, Namibia, Cameroon, Malawi, Mozambique. And I started working with cost of supply study in Eskom more than 25 years ago. So I consider myself an expert, but I'm certainly not an expert on all the regulatory issues. And some of the issues you're asking me, I wish I had answers, but I don't. But just in terms of then the issue of benchmarking versus cost of supply, and can we run the two processes in parallel? So firstly, remember there are two critical issues. The first one is the average tariff level or the average price increase. And the second issue relates to the tariff structuring. So in all of the studies I have done, except for one in Tabachu, we have not asked for an additional price increase over and above the NERSA benchmark. So I think also all the municipalities are quite aware of the impact on their consumers and therefore are hesitant to ask for additional price increases. It's not just the real impact, but also issues relating to riots, etc., etc. So I think the two can run concurrent. I would certainly say that if the cost of supply study indicates that there should be an additional increase, it should be compared with the actual NERSA benchmark and identify what are the factors. Why does the benchmark not address their issue? For example, the municipalities buying at the rural tariff. So that is an exceptional. It's a different case. Their purchase cost, which we know is about 75% of the total cost, is 20% more. So that would then warrant an additional increase. But on the other side, we know that those poor municipalities, the people generally are even poorer than in the cities. So it remains a complex issue. However, I believe the two can run concurrent. They have been running for quite a while. And as I said, so that's the first issue relating to the average price. The second issue relating to the structuring. And I think that is where I believe the big challenge and the big advantages lie, so that we can move away from these non-cost reflective inefficient price signals of the IBT tariffs, for example, moving to tariffs that have got cost-reflective basic charges, cost-reflective network charges, and time-of-use energy rates. That will not just ensure more cost-reflectiveness and fairness, but also offer immense opportunities for the customers to shift load and thereby reduce their own bills, but also the customer's bill. So that for me is the big advantage of moving to cost of supply. And it's in line with activity-based costing in the respect of allocating costs. We know that National Treasury through the MSCOA accounting standard, the municipalities are required to start ring fencing their activities. For example, between medium voltage, low voltage. I believe they need more categories, but so that is the right way to go. And I can submit the detailed comments relating to the ABC, which parts of it is, I believe, is not workable now. So just Ms. Itole, the issue of my proposals for maintenance, as I said, you know, I'm a tariff expert. I know what has to be done. You know, there has to be a maintenance plan, and NERSA has been good in requesting that from municipalities, but enforcing them to do it. You know, I've seen how many cases where electricity department heads would go to finance and ask for money, and it's simply turned down. So, you know, what do those managers do? What does NERSA do? Unfortunately, I don't have a solution for you. I don't have an answer. So I think NERSA has grown a lot in terms of analyzing the costs properly. There are a few things to be done. I mean, for example, one of the things that take a lot of time is the analysis of the Eskom bills. I mean, some municipalities have got 10 feed-in points, and analyzing those bills is quite a complex issue. Some of the sales reports, to analyze those, you know, you're getting the D forms, and I can tell you on every D form, I will find 100 mistakes. It's simply not correctly done. In some of the well-run municipalities, the coding of the tariffs and the sales reports are terrible. So to reconcile that, I've been sitting for the last 3 days just trying to get sales reports to tie up with what is in the trial balance and what is in the D forms that have been submitted, and I simply cannot do it. So so there are a lot of challenges and things that that NERSA could look at. One of the things that I thought is Eskom could produce an Excel or a file that gives us the summary of all the bills to a municipality, so that NERSA doesn't have to go and take one by one bill and take all the individual figures. And we know with time of use, it's quite an extensive thing. So those are some of the things that I believe can be done to simplify NERSA's work and that of the municipality. But otherwise, unfortunately, I'm not running NERSA. I'm giving really inputs on the tariff side, which I believe can lead to massive improvements on efficiency. I hope I've answered the questions.
Yes, you did, Mr. Tola. Last follow-up, if you have.
Yes, Chair. Just one last thing to Mr. Barnard as a consultant. Thank you for the responses that you have given. In terms of the D forms, in my experience, some of them you find that they're not completed from a municipality side by the right people at the right level. In some instances, we would get them being completed at a lower level. So in your experience, or in relation to that, because you've commented that the D forms maybe needs to be reviewed, do you think from the municipality side that you have consulted with, there is commitment to have these completed at a very high level, such that you don't have the discrepancies that you have just mentioned in terms of saying, when you reconcile their financial documents and what has been submitted, there are huge discrepancies. From your side, in terms of being a consultant, would you say to us as NERSA that those forms are completed at the highest level within the municipalities? Because if they're not, that's where the challenge is, because from the regulator side, we have tried to write to municipalities to ensure that these get signed, they get completed by the CFOs of those municipalities. So I just want to get your comment in relation to the completion of those D-forms, such that when we do review them, we also take into account the level that is required in terms of completing them, because that's another challenge. And we have ended up with our staff members having to assist municipalities to ensure that those forms are completed at the highest level. Thank you, Chairperson.
Thanks, Ms. Tole. If you could do that without obviously saying something that your clients did not ask you or give you mandate and expose your clients. We're not necessarily doing that and self-incriminating the clients that you are representing today, but we would like to just get some help in terms of what can be done to improve the quality of the information that is on the D forms, and also to make sure that even the time lag that we observe in terms of the information that is on the D forms, sometimes as we're sitting in 2022, you may find that the information that is in the D forms is 2019, is not even 2020. And now when you do the comparison, you are likely to do comparisons with information that is for 2020, not even 2021. Or even maybe information that relates to 2019. So those are some of the challenges. Over to you, sir, on this question that is asked.
Thank you. The issue of the D forms. Firstly, I don't believe it is completed at the right level. But as I indicated, and I'm not talking on behalf of George, I'm talking as a expert on cost of supply studies. One of the things that I've been doing in the cost of supply studies after discussions with Dr. Bongani is to actually provide the sales report together with the D forms and to provide the links. So instead of entering the values, I enter the links directly into the sales reports, so that when NERSA evaluates that, they can look at the formula and they can see that the link is correct. So that is something that could help, firstly, to show NERSA how it is done, and which then will be easy to identify problems. But as I said, the coding of a lot of the sales reports and of the tariffs is not very well done. And that means that, for example, we have now basic charges for prepayment customers that are recovered through the billing system. Now that, for example, such a tariff should have a different code, but in most municipalities they don't. Most of the sales report would not give you the access demands. You have to ask for that separately, and in many cases you simply cannot get the data. You have to take the charge that's been levied and divide it by the tariff to get you the demand. So it's not just the problem of who has to complete it, but how are the systems set up? Do they accurately reflect to the individual tariffs? Another problem that they do, so we would, for example, have a tariff for a single and a three-phase customer. So the energy rate is the same, but the basic charge is different. But there's only one code for the energy rate. In other words, you don't know which kilowatt hour belong to the single-phase customer and which belong to the three-phase customer. So what I then normally have to do is to take a file containing the details of every single customer, and then to determine what is the sales for single and for three-phase. So it is not just the level of person that need to do it. And then we talked about the capacity. The people that had the experience are leaving. We've got lots of new CFOs that have got big problems to address, and for them, the D forms is simply an irritation. Despite the fact that they know it's got to be done, they just simply don't have time. So it remains a problem, but I would certainly suggest that NERSA should say that the sales report and even the trial balance should be attached, and it should be, the DFORM should provide the links to those. That, I think, will really help.
Yes. All right. Thank you very much, Mr. Barnett. I think also it is something to take up from our side. You are correct, and not just by additional reports, but I think also as part of our IT program on the regulatory reporting manuals, because the system on the DFORMs is one that had to, and the staff of both the energy regulator and licensees had to set up the system and undergo some training and also monitor the adequacy and effectiveness of the system. So it seems that perhaps that aspect now is the one that must be given attention to see if it's of assistance at all, the effectiveness, the adequacy of information that is contained there, what improvements on the systems that were built for the templates, and whether the templates contain the right information. I think it requires that kind of evaluation. I do agree. Thank you very much. I think it's part of the RRM project, and it requires those consultations that were done in the previous years, that they be undertaken together with the licensees to improve the system. All right. Thank you very much. I don't think that there are any further questions from the colleagues. Would like to thank you for your time, for availing yourself to present today. We thank you for all the information as well as the responses that you have provided. And at this stage, I just want to indicate that you were the only presenter today, and we do have a number of other stakeholders on the call who are observing the proceedings, and others that have specifically made requests to NERSA to observe the proceedings today. And I would like to extend my appreciation to those stakeholders for being part of today's hearing. And also just to indicate that given the fact that all of the applications that we're expecting from municipalities, they have to be approved by the 30th of June, which leaves us leaves us with just limited time for us to consider, but also to receive applications, and applications must also be supported by approvals within the councils. So it is important that the process itself is, in terms of timelines, is managed carefully without compromising on any processes and quality evaluation of the applications. So we'd like to thank you and also indicate that yes, we need to then take the matter to the subcommittee as well as the ER for consideration, so that the industry is very clear as to what is the applicable benchmarks and guideline increase that they need to factor in when they submit their applications to NERSA. We will inform stakeholders by way of notices for the meetings of the subcommittee, as well as the meeting of the energy regulator, for the final consideration of the input that we have given, and also the decision on the tariff guidelines, as well as guideline increases, as well as the benchmarks. Would like to thank you, members, and thank you everyone on the call. And this hearing is now adjourned. I would like NERSA panel as well as staff of NERSA to remain behind for a few minutes, please. But stakeholders may now